You are listening to chartingwealth.com for Tuesday, the 21st of March, 2017. We see that stocks are mixed. The S&P 500 is down for the day, whereas QQQ, the NASDAQ 100, is up. Gold and bonds are both up also. Let's jump right into the S&P 500. Like we said, it was down 0.11% on Monday. We have a completed two-day down candle that is a red closed box with a longer wick on the bottom than on top. We are currently in a confirmed down move since the candle ending the 14th of March. And we have seen that accelerate with the last two-day candle. We have a confirmed downward crossover on the two-day. However, the weekly is still in a confirmed up move on the S&P 500. It means we've got a little bit of schizophrenia here between our long-term chart, that is the weekly chart with that vertical crossover back on Thanksgiving of last year, and we see that the market has really stalled out and slidden sideways and starting to move down. But until we get a confirmed crossover going down, that is a weekly vertical crossover, we continue to watch the market go up. Now, we do see a real indicator of that getting close on the S&P 500 as the PPO, the price percent oscillator, which is a blue line on our charts, is moving toward the signal line. Derivative oscillator is also losing a lot of energy, but the derivative oscillator has a lot more energy to lose. Maybe it'll happen over the course of this next week and we'll have a confirmed crossover going down. Maybe not. It's still pretty strong. So we shall wait and see. Again, we trend follow. We don't make the charts do what we want because you can't do that. We wait for the charts to do what they're going to do and we follow them. And as soon as we do have that weekly vertical crossover going down, that's when you could get into an inverse trade on something like CH, which is the ProShares short S&P 500 that you can buy when we have a vertical market crossover on that weekly chart. SH, did I say CH? Sorry, SH. We will talk more about that if indeed when, well, not if, but when the market changes, because what goes up does come down. Okay, we're going to continue to just keep an eye on what's going on this S&P 500 chart. We don't have anything to trade on it at this time. Now we'll go to the Qs, which was up for the day. We still are plugging along above the weekly trend line. However, the two-day chart's in a confirmed down move. Will it cross back over? Doesn't look like it, as the PPO is continuing to accelerate down. We're getting very close to the the DO's accelerating down. The PPO, wait a minute, sorry. It's been a long day, my friends. The price percent oscillator is accelerating down. It's actually kinked over, going more into down momentum. And we can see that the derivative oscillator is also getting very, very small, which leads you to believe that the Q's upward movement with that divergence, where continuously price go up, but the PPO go down, we would expect that the Q's would roll over on that two-day chart soon. But because of the sideways slide, it does cause for our price percent oscillator, which is very similar to the MACD, to not do as well when we don't have a market that's really trending up or down. So some inaccuracies in there, but at the same time, we do have a divergence as the market goes higher, but the PPO goes lower. So continue to keep an eye on that. We don't have a trade at this time because, again, of the schizophrenia between the fact that we have our weekly chart going up and our two-day chart going down. If we do have a crossover of the two-day chart going up, then, of course, that could mean that we might have a jumping in point for a trade, but that has not happened yet. Let's keep moving through these charts. Next is TLT. That's the 20-year Treasury Bond Fund. What do we see going on there? Well, we see that the downward momentum is losing. We see that we are gaining some upward momentum as the PPO moves up and the derivative oscillator loses more of that down energy. We had a nice up candle for the last 2 days that closed out on Monday, the 20th. And we see that there is more upward movement in a wick than the total movement in the chart. And of course, that shows an acceleration moving up in that price movement. Of course, it's already broken through the 2-day trend line. Gold is in an upward trend line. So if indeed, the gold weekly vertical crossover is moving up. If we do see a crossover going up on the 2-day chart, then of course that will alert us to a possible entry point. So keep an eye on that. It may happen over the course of the next 2 days. And of course, you'll have to wait for that to actually close out before it's confirmed. If you jump in too early, you're taking a lot of unnecessary risk. We wait for a confirmed closing of a candle with a crossover before we call it. All right, lastly, we will go to gold. What's gold doing? Gold's in a confirmed up move, but it broke through the weekly trend line many candles ago. What's that? 5. So 10 days ago, gold is moving back up again, however, trying to get up near where that old trend line was. We still don't have a crossover on the 2-day chart. It's still in confirmed down move, but just like TLT, the 20-year bond, gold may cross over going up. If we see that happen, once that candle closes on the 2-day chart, you may have a jumping in point for a further up trade in gold. Folks, that's how we do it. You have questions, problems, concerns, you can always write us, cw@chartingwealth.com. We're always happy to hear from you and respond as best we can to all of your emails. Remember, we're not a stock calling service. We're an education firm. We want you to practice trade with us, opening a virtual account in any of those online brokers and using our daily market worksheet to track your progress. As you listen to our 10-minute podcast every day, we want you to fill out that market worksheet so you have a nice diary, a trader's journal, so that you can go back and watch your progress. And there's something magical about putting pen to or pencil to paper, keeping up with that. There is a hand-to-brain connection that you can't mimic any other way. And again, we are happy to help you. If you would like to be on our list to receive alert messages for weekly vertical crossovers, which are the key to what we do in our trend following, we ask you to do this simple thing. You'll get no more than 6 text messages a month. So far, it's been 1. When we do have these occur, we will notify you, and it is the key to trend following. These weekly vertical crossovers, as we saw happen in gold back on the week ending the 27th of January, was an incredible run-up. If you look at the entry point somewhere around the 114 mark on that following Monday, and we see a run-up from around 114 to somewhere in the 120 range, that's $6 over the course of what, a month? So again, pretty amazing stuff. That's what's so cool about our weekly vertical crossovers. Here's how you get on our list to receive that notification. You need to text to the number 33222. Text the word Charting Wealth. One word, Charting Wealth. That's our name, chartingwealth.com. Just text Charting Wealth. Please don't go and send us a Facebook message that says 33222 Charting Wealth. Don't send us an email. You wouldn't believe the crazy stuff I've received. Text to the number 33222, the one word Charting Wealth, and we will put you on that list and notify you. If you've not already signed up for our newsletter, man, what are you waiting for? You get so much good stuff with it for free. Go to our website, chartingwealth.com. Put in your first name, your email address, and we will send you so many cool, good, free things. You will get every day our daily market review. You'll get once a week our weekly review and forecast, or comprehensive weekly review and forecast as we call it. And you'll get our How to Read a Stock Chart video, a link to that. You'll get the layout and how to get freestockcharts.com. The operative word there is free, the best free charts in the world. We send them to you already preloaded with the layout that we use every day to review the market. You'll also get a PDF file of our daily market worksheet and our weekly market worksheet. Can you beat that, man? And it's all for free. We thank you so much. If you're not already subscribed, please make sure to do so. Also go to our YouTube site. Subscribe there, Charting Wealth at YouTube. And also, please, at iTunes, subscribe to either our video once a week podcast or our daily audio podcast. Give us a 5-star rating. Say something nice about us. You guys have made us as popular as number 6 in the world for stock trading podcasts, and I believe as high as number 9 in the world with stock market podcast, maybe backwards. Anyway, we've been 6 and 9 over the course of many months, and we so appreciate your support, the nice things you say about us. We're here to help you. We don't charge a dime for what we provide. At some point, we'll have probably some specialized training classes based upon what you want. And of course, if we do that, we have to start renting space at Citrix or something else. There will be charges for those things. But at the same time, it's our payback to you. We want you to understand the stock market and be empowered to go out there, learn how to trade stocks, learn how to invest, learn how to read these charts. And when you get good and you can routinely make successful practice trades, then and only then can you make up your own mind to spend your own money wisely investing in the market. Thanks so much, my friends. God bless. Let us hear from you from chartingwealth.com.